Hello and welcome back to the channel. So since my last update, we've actually had the best month in the history of my portfolio. So we received $87.56 in dividends for the month of July. And it's looking like the RRSP is way back into the green. This one only holds Starbucks, and the TFSA is also back in the green by 160.66. So if you want to follow along with my buys and sells, subscribe to the channel, like the video, and let's roll the intro. So Starbucks reported their earnings and pretty good results overall. Their net revenues are up 9%. Same store sales are up 3% globally and up 9% in the US and up double digits internationally, excluding China. So unfortunately, China is not working out for Starbucks. I mean, China's not working out for any investor due to their zero COVID lockdown policy, which just isn't working and is hurting the country, hurting the economy. It's just not good. And Starbucks had many stores. Like in Shanghai, they had all of their stores closed for about 2/3 of the quarter. And then in other regions, like they had like maybe 1/3 of their stores were operational, like even allowed to be open, but they had no indoor dining. So definitely not good things for Starbucks in general. So their sales are down about 44% in China year over year. But we can't really control what happens in China, as I'm finding out, and the government is not helping. And another key thing on this earnings report is the active Starbucks Rewards memberships are up 13%. So this is their app, the Starbucks app, where people load their cards and then they drink later. So essentially, Starbucks is just getting free money. And then with that money that people load onto their cards, they can use that to open new stores and continue to grow the business. But an important thing if you're investing in a restaurant or any kind of business like this, any kind of retail, is you want to see same-store sales go up. And that's happening. If this number were declining, that would be bad. I mean, it still means the company can grow overall, but this means that even with their existing stores that they have, even without opening new stores, they can continue to grow their sales and increase the bottom line. And from the earnings call, I gathered that they are going to be partnering with Nespresso. So Starbucks products are going to be offered on that, just like on the Keurig. So that's going to be a great partnership. It's going to increase Starbucks' sales some more. And another key thing from the earnings report was that they're doing quite well in Italy. So they're finding that in Milan, people are really responding to the Starbucks brand, and they're planning to launch in other major cities in Italy like Rome. So very interesting stuff there. And one more thing that I found really interesting from the earnings call was the fact that 74% of their sales are actually from cold beverages, not from the hot beverages, which you may find surprising because you would assume Starbucks sells just hot coffee all the time, but no, apparently not. They sell cold drinks. It's very popular with Gen Z, so very popular with the youth of today. And and with all the customization options that Starbucks offers, people post that on social media, and you can kind of make your own drink. So that's very resonating because some businesses have issues with an aging customer base. Starbucks doesn't have that problem, so I'm very happy with this earnings report as a whole, and I will gladly buy more Starbucks when my dividend comes in. I'll add a bit more money. It has recovered due to this excellent earnings report, but I see nothing but good things for Starbucks ahead. And the TFSA were up 1% or 160.66. So we're back in the green in the TFSA. Apple leading the way, absolutely crushing it for us. So it's up 15%. I really added a lot to this position when it was in the 140 range. I really decided to focus on it. I'm glad I did. It's really run up. Algonquin's going to be presenting their earnings in about a week, but there are some other renewable energy companies, and they had pretty good earnings reports so far. So it stands to reason that since AQN is in a similar industry, you can kind of look at the competitors or similar businesses in the same industry, and you can kind of get a feel for how the industry is as a whole. And it's just a great way to keep up with not only your business, but you may even notice that maybe another business is more eye catching or growing at a faster rate or just faring better with similar issues or different economic situations that can happen. So we'll see what happens there with ATD. Newer position, but again, I added 2 more shares, so we went from 2 to 4. I want to continue adding to this as I think it's very well priced at the moment. So I'm definitely going to add more to there. Aritzia also doing very, very well, up 13%. So this is a really, really new position for me, but I would like to add more. And then Alibaba actually had probably the worst earnings report I've ever seen, to be honest.
Katie, Christina, how bad is this? Be honest. Is this Windows Vista bad? It's not iPhone 4 bad, is it?
I'm sorry, Gavin. It's Apple Maps bad.
It's very disappointing to me. So, I mean, Wall Street was happy because, they beat the expectation of Wall Street, but I'm not, because their revenue is basically flat, maybe even slight decline, which is the first time in their history. And you can blame that on the lockdown all you want, but even their cloud, Alibaba Cloud, is only growing 10%. It was 12% before, so it's quickly decelerating the growth of the business, and the fundamentals are just getting worse. And I really think I made a mistake on this one, especially because China's locking down so hard. And I really didn't think that they would hurt their businesses as much as they are. I figured that, they would do the logical thing and kind of, have their own economic self-interest at heart. But it looks like they don't care. And I'm no longer comfortable holding the stock, because as I've owned Alibaba, the growth rate has slowed down. The margins have decreased. The outlook keeps getting worse and worse. And I just don't really know what's going on with this company anymore. It's just not heading in a good direction. You could just see this earnings report. It's just absolutely atrocious. And financial was taken away from Jack Ma. So that just shows that the Communist Party in China can just take away your business and you will have no say in it. So that was something that was supposed to be really good for Alibaba, but now they won't get to IPO that. They won't get to raise a ton of money. So I really have to take this loss. I think I'm going to be selling it tomorrow. I took the day to think about it, but, I really overestimated the Chinese government. I thought that they would care more about their economy. They wouldn't hurt their treasures, which, would be, probably their best companies, but they don't value their companies. They don't care about them. And just their policies make absolutely no sense, and they're destroying their own economy. So I have absolutely no faith in that country anymore. I don't really want to invest in that region anymore. So I'm going to be selling this tomorrow. I'm going to be taking a pretty big loss on it, but I think it's a good lesson to look at a company. And when the story changes, so when I originally bought Alibaba, it made a lot of sense. I'm like, oh, it's trading at a very low valuation, and people are just overblowing the fact of the Chinese government. But I'm like, no, you know what? In hindsight, yes, I couldn't have possibly known that it would get this bad this fast. But the fact that every other country isn't locking down anymore and China is not really inspiring a lot of confidence. And then we're talking about delisting fears again with Alibaba, so it's been added to the SEC list. So overall, just not very happy with this company. And it was a fast-growing company when I originally invested in it, and now it's just decelerating. It's getting worse. You can blame it on lockdowns all you want, but the fact is the fundamentals of this company have been shrinking and shrinking, so it deserves to be trading at a lower stock price. And the fears can't be overblown. So in the future, I'm going to definitely research the the cons of investing in a company. So definitely seek out some resources that don't give you confirmation bias of your investment. Just don't seek out just positive things about the company. Look at the risk factors, really weigh in on them. The fact that I just did not respect the fact that the Chinese government would be such a hindrance to this company and the Chinese economy as a whole was my big mistake. And I'm going to be selling this at a loss and probably shifting most of the money in this position to Aritzia, maybe a little bit of ATD. Because I think Aritzia can grow faster, and it doesn't have these issues. It's still growing at a good pace, and I don't have to fear that the Chinese government will come in and take the business away, because they've already done it to Ant Financial. They can shut down any business they want. They have absolute power. It's a dictatorship, and I'm just not comfortable investing in that region anymore, because apparently they can go farther than I thought they would, and they crossed a line. So I'm finally going to sell this. I'm going to sell this probably tomorrow, and then just put the money into other stocks and just move on from this position. Brookfield Asset Management has climbed up pretty well, so it's up like to the mid 60s. So almost recovered. Same thing with Scotia, just in a slight dip. Income funds are still down, but that's fine because the DFN income fund is like really heavy in the banks, and the banks and financials in general have really declined, but it's a really good buying opportunity. Enbridge has been doing well. Ethereum has been, kind of neutral. It's sort of recovering, but not really. We haven't really seen this recovery in Ethereum yet, so we'll see if crypto improves. And Google's climbed up pretty well as well. I also purchased one more share of Intel, so we went from 18 to 19. I'll probably buy one more of this from the sale of Baba. I still believe in Intel overall. It doesn't have, the issues that Baba has. I mean, it isn't a turnaround, but I actually still believe in the company itself. The company itself isn't slowing down growth just continually and just getting worse and worse after every earnings report, and the story isn't getting worse with Intel for me. So I'm going to stick with this one. So hopefully we'll have better results with this one than Baba. And we also picked up one more share of Smart Center. So just increasing our real estate exposure. And for the dividends earned since starting the portfolio, I've earned $679.95 in dividend income so far from the portfolio. Annually, we're up $823.69. That's up from $815.02 from the last update. Monthly, we're earning $68.64. Last update was $67.92. Weekly, we're making $15.84. Last time was $15.67. Daily, we're earning about an extra 3 cents a day, so $2.26 up from $2.23. The month start at $100 is decreasing. So this is another way we're tracking our dividend snowball and our compounding. It's taking us less and less time to earn $100. And if our portfolio were to go out there and work a 40-hour week job for me, keep in mind this is all passive. I don't do anything for this. It would be earning 40 cents per hour, so about a 1 cent raise at the portfolio's workplace. So they're working hard and they're getting raises, and they're going to continue getting raises as the dividends increase by the companies increasing dividends, and also reinvesting my dividends and making new deposits into dividend-paying stocks. So that's definitely my preference. I really like seeing these charts and the progress over time. So July was the best month I've had so far, $87.56. So it's about $10, a little more higher than what we had in April. So this trend should just continue over time. July is a very heavy month for us. I'd like to build up May and June, so I'll try to maybe pick up some more monthly dividend payers to try to smooth out those lower months, get the floor a little bit higher, and maybe even try to get the high month into over $100 a month. That'd be really nice to hit. And so we're still on our way to earning $3 a day in dividends. So if you want to get started with investing and you would like to get commission-free trades on Canadian listed stocks and ETFs, feel free to use my link in the description for WealthSimple. You can sign up for that. And then you deposit money into a personal account. You can get the value of a couple $1,000s just for starting that. And that's pretty much it for this update. And in the comments below, just let me know if you think I'm right about selling out of Alibaba. If you think I'm wrong, I mean, I like to hear your opinions in the comment section below. I've pretty much already made up my mind, but it'd be nice to get some feedback in the comments and know what you're all thinking out there. All right, have a great day, everybody.